If you're searching for land in Delhi today, you already know the reality. Finding an affordable, legally clean plot feels nearly impossible. Established areas in Rohini, like sectors 7, 11, or 15, are already at capacity. Market saturation has pushed property values there completely out of reach for a standard entry-level buyer. This bar chart compares the price disparity across the city. The overall Delhi average is sitting at north of 26,000 rupees per square foot, while Sector 29 is trading between 10 and 11,000. It is a developing DDA zone, currently priced at less than half the city's average rate, which creates a dilemma. Are you looking at a genuine ground floor entry point, or a trap that will lock up your capital in an underdeveloped area for years? To evaluate that, we have to look through two different lenses: the capital growth investor and the residential end user. Success here requires aligning your personal timeline with the actual maturation schedule of the sector. The first major catalyst for Sector 29's valuation is heavy infrastructure connectivity. This map visualizes the 75-kilometer UER-II route. It's an expressway starting from Alipur that cuts directly through Rohini. By following this route to the border, the drive time to Gurgaon drops by 20 minutes. This view of the airport terminal represents the corridor's direct terminus at IGI. This connection places Sector 29 directly on a major transit artery rather than the geographical fringe. Additionally, the upcoming UER-III road is mapped to run right past the front of Sectors 28, 29, and 30. Then there's public transit. The Delhi Metro Phase 4 expansion is scheduled for completion in June 2026. As shown here by the elevated metro line, the Rathala-Bawana-Narela corridor is coming. With stations planned for neighboring sectors 34, 35, and 36, Sector 29 will sit at the center of a new metro hub. Historical data supports this. When the Dwarka Expressway arrived, property prices in that corridor jumped 28%. Based on that pattern, expert projections for the UER corridor suggest an appreciation between 25 and 40% over the next 2 years. The connectivity expansion arriving in 2026 creates a significant valuation gap. But the trade-off is real. You have to live through 2 years of active construction and developing amenities. There is another risk factor to consider: unclear land titles and overlapping unauthorized colonies. Sector 29 is highly unusual because it is one of the only sectors completely untouched by unauthorized settlement. That provides title security, zero registration hurdles, and higher future resale value compared to mixed-zone neighborhoods. The current inventory features DDA, HIG, and LIG flats that are already ready to move into. These are fully registered properties. You avoid the bureaucratic complications common in other parts of the city. This legal clarity acts as a protective moat for your capital. However, because clean inventory in Delhi moves quickly, buyers have to be decisive. The financial runway fueling this entire development comes from a significant government capital injection. This timeline charts the Delhi government's commitment, a 19,546 crore rupee budget allocated specifically for Rohini's infrastructure over the next 5 years. When the government injects capital on this scale, institutional and private money typically follows. We are already seeing this with institutional shifts, such as new branches of Ambedkar University coming to the area. To see what happens when these catalysts mature, we can look at the Sector 37 precedent. This line graph plots the growth of neighboring Sector 37, which saw an 84% price hike over just 5 years. Sector 29 is currently sitting at the exact starting line where Sector 37 was 5 years ago. Securing that 10,000 rupee entry price requires a strict 3 to 5 year holding horizon. This is not an environment for a fast flip. So when we combine the connectivity, legal, and pricing data, who is this actually for? This decision matrix maps your primary goal against a 5-year timeline. For long-term investors with a 3 to 5 year horizon, this is a definitive buy. You have a high ROI environment and a low entry price. For end users, it is a calculated buy. You secure a legally clean DDA home if you can wait out the 24 months of active neighborhood development. But if you are a short-term flipper, or you need immediate access to mature schools and commercial markets, you should stay away. If you want to know what a specific budget gets you, or which flat type is better, let me know in the comments. I'll reply personally. In our next video, we'll do a block-by-block breakdown of Sector 29 to identify exactly which pockets to target. Sector 29 is a government-backed time arbitrage play. If you have the patience to wait for the infrastructure to catch up, the data is in your favor.